Listen closely, because what I'm about to show you is happening right now at the United States Mint. These Silver Eagle coins, they were selling for $91 just weeks ago. Today, $173. That's an 82% price increase in a matter of days. And the uncirculated versions, they jumped from $91 to $169. That's an 86% spike. But here's what's really shocking. The US Mint has now halted sales completely. Their website literally says not available, and they've removed all silver products while they evaluate pricing. This isn't just a price increase. This is a shortage, a real physical shortage of silver happening right before our eyes. And if you think this only affects coin collectors, you're dead wrong. This shortage is about to impact everything from your solar panels, to your electric vehicles, to your smartphones. Welcome to the Hidden Economy channel, where we expose the financial realities that mainstream media won't tell you about. If this is your first time here, hit that subscribe button and ring the notification bell, because we're tracking the biggest monetary shift in a generation, and you're not going to want to miss what's coming. And for my regular viewers, thank you for your support. If you find value in today's deep dive, please hit that like button. It helps us reach more people who need to understand what's really happening in the precious metals markets. Today, we're going into a deep investigation. I'm not just going to show you screenshots from Twitter. I've researched government data, mint production numbers, global supply chains, industrial demand statistics, and vault inventory levels from 3 continents. By the end of this video, you'll understand exactly why Silver Eagles are now selling for $173, what it means for the broader silver market, and most importantly, what you need to know to protect yourself financially. Let's start with the facts, and I want you to see this with your own eyes. On the US Mint website, as recently as early January 2025, the 2025 American Eagle 1-ounce silver-proof coin was listed at $91. The uncirculated version, also $91. Then something extraordinary happened. The proof version jumped to $173. The uncirculated version hit $169. We're talking about an overnight price explosion of 80 to 86%. Now, I know what you're thinking. Maybe silver prices just went up that much? Wrong. Let me show you the math. The current spot price of silver, that's the raw value of the silver metal itself, is around $90 to $91 per ounce right now in January 2026. In fact, silver just hit an all-time high of $92.25 on January 14th. So if you buy a Silver Eagle at $173, and the metal itself is worth about $90, that means you're paying a premium of approximately $83 over spot price. That's a 92% premium. For context, just 2 years ago in 2023, premiums on Silver Eagles were typically between $3 and $6 over spot, maybe $8 to $10 during high demand periods. Even at $50 per ounce silver, normal premiums would be $5 to $12. 92% premiums, $83 over spot. That's unprecedented. That's not normal market behavior. That's a shortage. But it gets worse, because after these price increases, the US Mint did something even more alarming. They completely removed silver products from sale. If you go to the US Mint website right now, you'll see a notice that says, due to rapidly rising metal costs, silver numismatic products have been temporarily removed from sale as we evaluate pricing across our entire numismatic portfolio. Products will be placed back on sale as soon as prices are adjusted. Think about what this means. The United States Mint, the official government entity responsible for producing American coins, cannot keep up with demand even at nearly 4 times the metal value. They're not saying we're sold out. They're saying we need to figure out what price point will actually allow us to make these coins available. Now, before we go deeper, let me explain what American Silver Eagles actually are, because understanding this context is crucial. The American Silver Eagle program was launched in 1986 under President Ronald Reagan. 2 pieces of legislation authorized it: the Liberty Coin Act for silver coins, and the Gold Bullion Coin Act for gold coins. Each American Silver Eagle contains exactly 1 troy ounce of 99.9% pure silver. That's the real deal, not silver-plated, not partial silver. 1 full ounce of nearly pure silver. These coins have a legal tender face value of $1, though obviously nobody spends them as $1 since the silver content is worth far more. The design is iconic. The obverse features the Walking Liberty design by Adolph A. Weinman, originally created for half-dollar coins from 1916 to 1947. It shows Lady Liberty striding toward the sunrise, wrapped in the American flag, carrying oak and laurel branches. The reverse featured John Mercanti's heraldic eagle from 1986 until 2021. Then, in 2021, the design changed to Emily Damstra's Vigilant Eagle, showing an eagle in flight carrying an oak branch, symbolizing preparedness and resilience. Now here's what makes Silver Eagles special compared to other silver bullion. First, they're backed by the United States government for weight, content, and purity. The government guarantee adds trust and liquidity. Second, they're IRA eligible. You can hold these in a precious metals IRA for retirement savings. Third, they're produced by the U.S. Mint at West Point, bearing the W Mint mark for collector versions. Fourth, they're the only silver bullion coins required by law to be made from silver mined in the United States. Since 1986, over 700 million silver eagles have been minted. They're the most popular silver bullion coin in the world. But here's the problem that's causing today's crisis. The U.S. Mint doesn't actually make the silver blanks, called planchets, that these coins are struck from. They outsource that production. And therein lies the heart of our shortage story. Let me explain how this works, because this is where the system is breaking down. The U.S. Mint doesn't have the infrastructure to produce its own silver planchets. A planchet is the blank disc of silver that gets stamped with the coin design. According to former U.S. Mint Director Edmund C. Moy, the Mint decided decades ago that it wasn't cost-effective to manufacture their own planchets because demand fluctuated so much. During low-demand years, they'd have expensive equipment sitting idle, so they outsourced to private suppliers. Here's the catch. The Mint is required by law not to pay more than the spot price for the silver they buy to make planchets. Think about that. They can't pay premium prices for processed planchets. They can only pay spot price for raw silver. Not long ago, the Mint had 4 vendors who could supply silver planchets meeting their strict specifications. Today, they're down to essentially one main supplier, Sunshine Minting in Idaho. There's a secondary supplier, Leach Garner in Massachusetts, but Sunshine Minting is carrying most of the load, so we've gone from 4 suppliers to 1. That's a massive vulnerability in the supply chain. Now, layer on top of this, the COVID-19 pandemic disrupted manufacturing globally. Supply chains that were already strained got absolutely hammered. But the pandemic did something else. It triggered massive demand for physical silver bullion. When people saw governments printing trillions of dollars in stimulus, many investors rushed to buy precious metals as a hedge. Sunshine Minting and other planchet producers were absolutely overwhelmed. They couldn't keep up with the explosion in demand while simultaneously dealing with pandemic-related disruptions. And here's the legal requirement that makes this even worse. By federal law, the U.S. Mint is required to produce silver eagles in quantities sufficient to meet public demand. It's literally in Title 31, Section 5112 of the United States Code. But they can't meet demand when they can't get enough planchets from their sole remaining major supplier, and they can't pay higher prices to incentivize increased production. The numbers tell the story. In January 2025, the U.S. Mint produced 3,563,000 silver eagles. That's pretty healthy production. But then look what happened. By July 2025, production had collapsed to just 305,000 silver eagles, from 3.5 million to 300,000. That's a 91% decline in production in just 6 months. And since May 2025, no single month has seen more than 600,000 silver eagles produced. When Congressional Representative Alex Mooney sent a letter to Treasury Secretary Janet Yellen about this, he pointed out that the Mint was in violation of its legal obligation to meet public demand. He noted that other mints around the world, the Royal Mint in Britain, the Perth Mint in Australia, don't have these problems. Why? Because they either make their own planchets or they've built reserve inventories to handle demand spikes. The U.S. Mint has done neither. So when demand surges, they simply cannot fulfill their legal mandate. Production drops, premiums explode, and eventually they have to halt sales entirely, which is exactly what we're seeing right now. But here's where this story gets really concerning. This isn't just about American silver eagles. This is about a global physical silver shortage that's been building for years. Let me hit you with some numbers that should absolutely shock you. The global silver market has been in a supply deficit for 5 consecutive years. Let me repeat that. 5 straight years where demand exceeded supply. These 5 consecutive annual deficits have removed nearly 900 million ounces of silver from visible refined stocks worldwide. Think about that number, 900 million ounces. That's 900 million ounces that were consumed and are not being replaced by new mine production. Now let's look at the 3 largest transparent silver inventories in the world: Shanghai exchanges, COMEX in New York, and LBMA in London. On September 30th, 2025, the combined Shanghai Futures Exchange and Shanghai Gold Exchange vaults held 1,189,648 kilograms of deliverable silver. By November 21st, 2025, just 51 days later, only 519,271 kilograms remained. That's a 56% drawdown in less than 2 months. Over 670,000 kilograms, that's 21.55 million troy ounces, vanished from Chinese exchange vaults in 7 weeks. On November 21st alone, another 15,819 kilograms was removed, even as the spot price was falling. This is what a physical squeeze looks like. When price drops, but physical demand increases, that tells you paper price and physical reality have disconnected. For the first time in modern history, all three of the world's largest transparent silver inventories are draining simultaneously at record speed. COMEX inventories in New York, declining. LBMA vaults in London, declining. Shanghai exchanges, declining rapidly. Nearly 1 billion ounces of refined silver have vanished from visible stocks since 2021. We've gone from abundant supply to critically tight supply in just 4 years. And here's the really scary part. Mine production can't save us. Global mine supply in 2025 is essentially flat at around 820 million ounces. It's not growing. New mines take 7 to 10 years from discovery to production. There's no quick fix coming. Meanwhile, total silver demand, industrial, jewelry, investment, and photography, is approaching 1.2 billion ounces annually. So we've got 820 million ounces of supply trying to meet 1.2 billion ounces of demand. That's a deficit of 380 million ounces per year. Where's that extra silver coming from? Stockpiles, inventories, reserves. The silver that's been sitting in vaults for decades, and those vaults are now running low. Retail premiums in North America and Europe now routinely exceed $12 to $15 per ounce on generic silver rounds. For recognizable products like Silver Eagles, American Buffaloes, or Canadian Maple Leafs, premiums are $20 and higher. Multiple U.S. mints and European dealers have instituted allocation limits or suspended sales of certain items entirely to ensure future supply availability. The all-in sustaining costs for many primary silver mining producers now exceed $28 to $30 per ounce. With silver trading in the 30s to 40s range and everyone in the supply chain needing their cut, there's very little profit margin left to incentivize new production. No significant new mining projects are being greenlit because the economics don't work at current prices, even though physical silver is becoming increasingly scarce. This is the paradox we're living through. Silver is getting harder to obtain physically, premiums are exploding, but spot prices haven't caught up to the physical reality yet. But they will. And when they do, it's going to be explosive. Now let me tell you about the demand side of this equation, because this is where it gets truly remarkable. Silver isn't just a monetary metal anymore. It's not just for coins and jewelry. Silver has become one of the most critical industrial metals on Earth, and the industries driving this demand are the future of our economy. Let me break down the big three: solar energy, electric vehicles, and technology infrastructure. Silver is absolutely essential to solar panel production. Each photovoltaic solar panel uses 15 to 25 grams of silver in its conductive paste. Silver's exceptional electrical conductivity is what makes modern solar panels efficient enough to be economically viable. And solar energy is exploding globally. In 2024, industrial silver demand hit a record high of 680.5 million ounces. That's an 11% increase from 2023. And 2025 is projected to be the first year ever that industrial fabrication exceeds 700 million ounces. The solar photovoltaic industry alone is now consuming more than 30% of all industrial silver demand globally. According to BMO Capital Markets, silver demand in the solar sector reached 261 million ounces in 2025, marking a 5.5% increase from the previous year. Think about the scale here. The European Union aims to deliver at least 700 gigawatts of solar capacity by 2030. China recently announced a $10 billion subsidy for solar panel manufacturers, projected to boost silver consumption by approximately 5% over the next 12 months. According to research from the University of New South Wales, solar manufacturers will likely require over 20% of current annual silver supply by 2027. By 2050, solar panel production is projected to use approximately 85 to 98% of current global silver reserves. Let that sink in. If we continue on our current trajectory of solar adoption, we could consume nearly all economically recoverable silver reserves just for solar panels by mid-century. Now, there are efforts to reduce silver content per panel through new technologies like copper plating, but these innovations currently represent a minimal portion of global production. And even if they succeed, the scale of solar deployment worldwide is so massive that total silver consumption keeps growing. Now let's talk about electric vehicles. This is another game changer for silver demand. A traditional internal combustion engine vehicle uses about 15 to 28 grams of silver, mostly in electrical contacts, control systems, and sensors. A hybrid vehicle uses 18 to 34 grams of silver. But a battery electric vehicle? 25 to 50 grams of silver per vehicle. That's 67 to 79% more silver than a traditional car. Where's all that silver going? Battery management systems, power electronics, charging infrastructure, electrical contacts, sensors for autonomous features, and silver brazing alloys for joining components. And here's the kicker. EV adoption is accelerating globally. In 2023, EVs made up approximately 18% of all new car sales worldwide. That was up from just 4% in 2020. By 2030, projections suggest EVs will surpass 60% of new car sales in major markets like Europe and China. The Silver Institute forecasts that global automotive silver demand will increase at a compound annual growth rate of 3.4% between 2025 and 2031. The rapid increase in EV demand and production means that electric vehicles will overtake internal combustion engine vehicles as the primary source of automotive silver demand by 2027. By 2031, EVs will account for 59% of the automotive silver market. Plus, electrifying transportation requires massive expansion of charging infrastructure. Every EV charging station uses silver. The National Renewable Energy Laboratory estimates that by 2030, the US alone will require 28 million EV charging ports. That's an enormous additional source of silver demand. Innovation in battery technology is also driving demand higher. Samsung's development of solid-state batteries featuring a silver-carbon composite layer could increase silver consumption to up to 1 kilogram per EV battery pack in future high-performance vehicles. 1 kilogram. That's 20 times the current average. The third major driver is technology infrastructure, particularly data centers and artificial intelligence. Silver's superior electrical conductivity makes it vital for semiconductors, circuit boards, and high-speed data connections. Data centers provide the physical infrastructure needed to run cloud computing services, store and manage massive amounts of data, and increasingly power AI systems. Get this. Total global information technology power capacity increased by approximately 53 times, from 0.93 gigawatts in 2000 to nearly 50 gigawatts in 2025. That's a 5,252% increase in IT power demand. More computing hardware means more silver. As AI adoption accelerates, so does the need for advanced data centers with cutting-edge hardware, all of which requires silver. Every high-performance server, every AI training cluster, every 5G base station, every advanced semiconductor, they all consume silver. So here's what we have. Solar energy consuming 30% of industrial silver. Electric vehicles creating exponentially growing demand. Technology and AI infrastructure requiring ever more silver. And all of this is structural demand, meaning it's not going away. The Silver Institute projects that sectors like solar energy, electric vehicles, and data centers will drive industrial demand higher through 2030, even as prices rise. These industries can't easily substitute away from silver. Why? Because silver has the highest electrical conductivity of any metal at room temperature. For high-efficiency applications, there simply isn't a better material. Yes, there are efforts to find substitutes. Copper plating in solar cells, alternative metallization techniques. But these are years away from large-scale deployment, and silver's superior performance means it will remain the material of choice for critical applications. Meanwhile, demand is growing right now. This is why the physical shortage is so serious. It's not speculative demand. It's not investment demand that might reverse. This is industrial consumption. Silver being permanently taken out of the supply chain and embedded into products that won't be recycled for decades. So let's connect all these dots and talk about what this means for silver prices going forward. We've established several key facts. The U.S. Mint cannot produce enough silver eagles due to planchet shortages. Premiums have exploded to unprecedented levels. Global silver inventories are being drained simultaneously. We're in the 5th consecutive year of supply deficits. Industrial demand is at record highs and growing. New mine production is flat and can't respond quickly. All-in production costs are squeezing miners' profit margins. This creates what I call a pressure cooker scenario. Physical silver is becoming increasingly scarce, but paper silver markets, futures contracts, ETFs that don't hold physical metal, can still suppress apparent price signals temporarily. But here's the thing about pressure cookers. Eventually, the pressure gets so intense that something gives. Look at what's happening in China. The Shanghai Futures Exchange and Shanghai Gold Exchange lost 56% of their silver inventories in 51 days. And on one day, November 21st, massive silver withdrawals occurred even as the spot price fell. That's a massive red flag. It means physical buyers in China don't care about short-term price movements. They're acquiring physical silver regardless of price because they understand the supply situation. In October 2025, silver reached $54.24 per ounce. Then it exploded higher, hitting an all-time nominal record of $92.25 on January 14th, 2026, just days ago. This is the highest silver has ever been in nominal dollars. We've blown past the previous highs of $49.45 in 1980 and $48.70 in 2011. Major analysts like Metals Focus are now projecting that silver could breach $100 per ounce in 2026 if current supply deficits and clean energy demand trends persist. And we're almost there already. But I think we may already be witnessing that repricing. Here's why. Silver has nearly tripled from where it was just a year ago. A year ago in January 2025, silver was around $31 to $32 per ounce. Now we're at $90 to $92. That's a 200% gain in 12 months. This explosive rally was driven by the exact factors we've been discussing: supply deficits, inventory depletion, exploding industrial demand, and growing investment interest. When the last readily available physical silver leaves the vaults, the price discovery mechanism fundamentally changes. We shift from whatever the paper market can bear to whatever it takes to pry the last ounce out of private hands. The current situation with Silver Eagles is a preview of this dynamic. The U.S. Mint had to effectively quadruple their premiums and then still couldn't keep up with demand, leading them to halt sales entirely. What happens when this dynamic plays out across the broader physical silver market? We've already seen silver-backed exchange-traded products absorb 95 million ounces in just the first half of 2025, pushing global ETF holdings to 1.13 billion ounces. Investment demand is returning, and unlike industrial demand, investment demand can accelerate rapidly when investors sense a supply crunch. Right now, silver is trading around $90 to $91 per ounce as of January 17, 2026, just below its all-time high of $92.25 set 3 days ago. But remember, industrial users are already paying premiums of $15 to $20 over spot for physical delivery. Retail buyers are paying $80 to $90 over spot for recognizable products like Silver Eagles. What's the true price of silver? Is it the paper spot price, or is it what you actually have to pay to get physical silver in your hands? I would argue the real price is increasingly diverging from the spot price. Silver was designated as a critical material by the U.S. government in 2025. This indicates potential future policies aimed at securing domestic supply and enhancing supply chain resilience. That designation doesn't happen unless there's genuine strategic concern about supply. And one more factor: inflation and monetary policy. Central banks have printed unprecedented amounts of money since 2020. The Federal Reserve's balance sheet expanded enormously. When there's more currency chasing the same amount of physical goods, prices rise. Silver is both an industrial commodity and a monetary metal. It has a 2,000-year history as money. When people lose confidence in fiat currencies, they've historically turned to gold and silver. We're seeing mixed economic signals right now: rising unemployment in some sectors, persistent inflation in others. If the Federal Reserve has to choose between fighting inflation and supporting employment, history suggests they'll choose supporting employment, which means more money printing. More money printing plus industrial shortages equals much higher silver prices. The fundamental equation is simple. 820 million ounces of supply cannot meet 1.2 billion ounces of demand indefinitely. Something has to give. Either prices rise significantly to ration demand and incentivize new supply, or we face genuine shortages where industrial users literally cannot obtain the silver they need for manufacturing. I believe we're at the beginning of a major repricing of silver. If you're considering silver as an investment, understand that we're in a unique historical moment. Silver just hit an all-time nominal high of $92.25 per ounce on January 14, 2026. Physical silver is becoming harder to obtain. Premiums are at extreme levels, and industrial demand is structural and growing. However, buying Silver Eagles at $173 when spot silver is $90 means you're paying a significant premium of about $83. That's a 92% premium over melt value. If spot silver rises to $120, you'd need it to reach around $200 to see similar percentage gains because of that premium. For bullion investors, you might want to look at products with lower premiums. Generic silver rounds, silver bars from recognized mints, or even junk silver coins might offer better value. That said, Silver Eagles have the advantage of government backing, high liquidity, and global recognition. They're IRA eligible. And if physical shortages worsen, highly recognizable coins might command even higher premiums. Another option is silver ETFs, though be careful. Some ETFs don't hold physical silver, they hold paper contracts. Research carefully before buying. This matters even if you're not buying silver coins. Remember, silver is in your solar panels, your car electronics, your smartphones, your computers, and potentially your future electric vehicle. If silver shortages intensify, manufacturers will face higher costs. Those costs get passed to consumers. Solar panel prices could rise. Electric vehicles could become more expensive. Electronics could see price increases. We might see manufacturers racing to secure silver supplies, creating artificial scarcity and price spikes in finished goods. If you're a business that uses silver in manufacturing, this is a major strategic concern. Companies that haven't locked in long-term supply contracts may find themselves unable to obtain silver at reasonable prices. The smart companies are already building stockpiles and securing multi-year supply agreements. Those that wait may face production disruptions. Now, what we're witnessing with Silver Eagles is a microcosm of a larger phenomenon. We're in a historic transition to renewable energy and electric vehicles. This transition requires enormous amounts of certain materials: silver, copper, lithium, cobalt, rare earth elements. Governments around the world have mandated aggressive timelines for this transition, but supply chains haven't caught up. The disconnect between political goals and physical reality is creating shortages. Silver is one of the first casualties because it's used so intensively in both solar and electric vehicles. This pattern will likely repeat with other critical materials. The era of cheap, abundant commodities may be ending. We're entering a world where physical resources become increasingly valuable because everyone needs them for the same things at the same time. I'm not a financial advisor. I'm presenting research and analysis, not telling you what to do with your money. If you're considering investing in silver, do your own due diligence, understand the risks. Don't invest money you can't afford to lose, and recognize that precious metals can be volatile. We might see sharp price swings in both directions before any major upward trend fully establishes itself. That said, I personally find the fundamental supply-demand picture for silver extremely compelling. The numbers don't lie. 5 consecutive years of deficits, inventories draining, industrial demand at record highs, and mine supply flat. Those are objective facts, not speculation. So let's recap what we've covered today. American Silver Eagles have gone from $91 to $173 at the U.S. Mint. That's an 82% price increase driven by a genuine shortage of silver planchets. The U.S. Mint has removed all silver numismatic products from sale while they evaluate pricing. They're down to one primary supplier for silver planchets and cannot meet demand even at 440% premiums over spot. This isn't an isolated incident. It's part of a global silver shortage. 5 consecutive years of supply deficits have drained nearly 900 million ounces from visible stocks. The world's 3 largest silver inventories are all declining simultaneously for the first time in modern history. Industrial demand hit record highs in 2024 and 2025, driven by solar energy, electric vehicles, and technology infrastructure. This demand is structural and growing. Solar alone may consume 90% of silver reserves by mid-century. Meanwhile, mine production is flat. New projects take 7 to 10 years. There's no quick fix coming. The pressure is building. Physical silver is becoming scarce while demand accelerates. Something has to give. When it does, I believe we'll see silver prices move significantly higher, potentially to levels that will surprise most people. The signs are already here. We just need to pay attention. Thank you for watching The Hidden Economy. If you found this analysis valuable, please hit that like button and share this video with anyone who needs to understand what's happening in the silver market. Subscribe and turn on notifications so you don't miss our next investigation. We're tracking this story closely and we'll keep you updated as the situation develops. And let me know in the comments, do you think silver is heading much higher? Are you concerned about physical shortages? What's your take on the supply-demand situation? I read every comment and love hearing your perspectives. This is The Hidden Economy, exposing the financial realities they don't want you to see. Until next time, stay informed, stay prepared, and keep questioning the official narratives.